the show, but now let's invite our next guest, V. Jaishankar, Senior Executive Director from Kotak Investment Banking, joins us now. Jaishankar, hi, good morning, and thank you for joining us on the show. There's been quite a bit of fundraising that we've seen in the last couple of months, say since the start of 2014, and it's been a total of $7 billion so far compared to the $10 billion that we saw all of last year. What's the sense you're getting about how much more there could be in the pipeline and who the likely candidates are for fundraising in the form of QIP, ADRs, etc.?
Yeah, sure. See, there are two sides to it. One is the demand, the second is the supply. From a supply side, if you see, there are at least about 15-20 companies that have taken an enabling resolution for QIP. Besides that, you'll also find a lot of companies coming to the IPO market. IPO market, as you all know, is a longer-term product. So by the time a company comes to the market, it's a good 6 to 7 months after they begin the work. So a lot of companies have started initiating the process for IPO. So between, say, the IPO, the QIP, the blocks that comes from promoters, PE investors, the government disinvestment, and others, I think the market will have a pretty huge appetite. If you look at the FII flows for the last 2 years, it's been about $20–25 billion. And it's safe to assume that perhaps we'll see an increased flow higher than this. Ideally, from our view, I think at least 50% of the flow should go towards primary market, so that there is no asset bubble, so that investors, especially the FIIs, have enough headroom to buy into stocks. As we all know, in many companies, the headroom has already been hit. So if we look at something like a $20–30 billion of FII flow coming in, I think at least $15 billion can be absorbed easily by the primary market. And as you rightly said, about 7 has already been absorbed. 8 can be easily absorbed. And from a supply side from the companies, from our discussions, it appears that this number will be achieved.
So, Jaishankar, good morning. Thanks for joining. So, your short point is that this huge deluge of offers is not going to be negative for the markets. Because of this deluge, the amount coming to the listed market is not going to be any less. We shouldn't worry about that.
In fact, I would look at it the reverse, Lata. I would say it's positive for the market. Because today there is also a concern by a lot of investors that many sectors have run up on optimism, and this will continue if the flows continue and you don't have fresh paper coming to the market. This concern will only grow. As against, if you see a fairly strong primary market, this new flow of money will get well absorbed without creating any asset valuation bubble.
So, Jaishankar, so far, the guys who have been raising money are those who are not really seriously under the weather. I mean, it was stronger banks that came in and raised QIP money. Do you think the really broken balance sheets, several infrastructure companies will get a chance in this good cheer that is prevailing in the markets? Will we see QIPs or equity offerings from them getting bought?
Lata, you raised an important observation. It's true that initially it's the better capitalized companies, better positioned companies that will come to the market. And on the back of that, I would foresee some of the companies in the infrastructure side and the power sector also tapping the market. This will probably happen on the back of a budget, on the back of some greater statements coming from the government on policy reforms and economic reforms. So I think that you will see some of the sectors that have been troubled in the past having a better visibility into the primary market post the budget. And you really coming to the market.
So you think the infrastructure guys, several of them which have become penny stocks will find buyers?
I wouldn't say across the board. Obviously, within the infrastructure space and the power sector, there are companies which have got a strong portfolio of projects where it was more a question of either the fuel availability that had become a question mark, or some of the policy issues that was coming in the way of really operating at peak capacity. So when these issues get resolved, these companies will be able to restructure their balance sheet and run a very efficient operations. So it would be those power companies and infrastructure companies. I won't want to take names because it won't be exhaustive, but there will be several of them which will be able to really come to the market.
Okay. Jaishankar, tell us about, what you're expecting from that big SEBI board meeting on the 19th of June. There are a whole host of reforms which are expected by the street, but in your assessment, what could come through?
See, there are many recommendations that have been made to SEBI. Ultimately, I do not know what all will get approved and in which format. Some of these got to do with the IPO products, some of these have got to do with OFS and so on. So on the IPO side, it's very possible that the anchor portion perhaps may be increased. There is certainly some suggestions and recommendations that have gone to them. There's also a suggestion that's gone to them saying that instead of having one fixed number of 4,000 crores as the cutoff to decide whether a company will make a 10% public float or a 25% public float, it's too digital and too big and too large a range. There are some suggestions on how we could make 400 crores as the minimum size so that it may lead to either a 10% or somewhere between 10 to 25% as the minimum dilution. So there are some of these suggestions which will give greater comfort and confidence also to companies to come to the market. Today the issue is many promoters feel that making a 25% dilution all because I'm pretty close to this 4,000 crore number, and therefore there's a tendency to postpone an IPO by a year or so. So what will happen is when you have growth needs, you will probably come to the market quicker. So some of these recommendations have gone to SEBI. We need to see in what form the SEBI board approves it.
Okay. Well, finally, Jaishankar, what's your view on the market itself? We've seen an onslaught of bad news, the Iraqi issue, the monsoons which could be elusive, the inflation number that didn't look good, but the market's kind of held its nerve. Do you think we could see a bout of selling after the budget? Probably all this resilience is only till the budget.
Lata, the one thing I would say talking to corporates as well as investors is that there is a fundamental faith in the India growth story. So that is going to drive the overall trajectory of this market. No matter what may come as news in between, there will be global events like the Iraq situation you talked about, which will lead to market correcting itself, which will lead to some of the selling during short periods of time. But in my view, all these news about Iraq and the weak monsoons or high inflation numbers will probably be taken in stride by the investors, will also be probably taken in stride by corporates. The overall trajectory will continue to be pretty strong, and you will have enough windows of opportunity both from primary market as well as secondary market for investors to invest in the Indian stocks. So that is the view that we hold. Of course, there can be some major global events that may have a bigger impact. I mean, today we all believe that the Iraq situation, while concerning, will probably not really spread into a larger issue. Those risks do exist, but I think the overall trajectory of the Indian market is clearly upwards because there's a long-term optimism that I see being shared both by investors as well as by corporates.
Jaishankar, we'll leave it at that. Thank you for being with us and giving us your view. So that's an optimistic view coming in, although there will be a lot of supply that may hit the market, the primary markets that is. The market will be able to absorb it, he said.